Hi everybody, it's Trisha from Serene Education with your 4 majors in this update for the Monday to Friday, the 18th of August to the 22nd of August. Okay, so in front of me, you'll notice that I don't have the FX8 Ultimate template open. Students and a number of individuals, we did a webinar recently, would like me to go through in a lot more detail on how I actually go about looking at the particular charts I trade and how I come about looking for opportunities. So open up with the euro against US dollar here on a monthly time frame using the MetaTrader platform. I'm now going to show you how I go about actually doing my analysis. So what I do is I always tend to open up on the monthly time frame. Looking at the euro against US dollar here on the monthly, you can quite clearly see right here on the hard right edge, price, the euro against the US dollar has been quite negative over the past 3 months. In fact, we didn't see any new highs through most of January, February, March, April. As you can see, we clearly found resistance here at the 13.878 and 5 change. We had a bearish engulfing candle, and subsequently since then we've not seen any further highs. In fact, the last month in fact has been a very, very bearish one indeed. What it's done primarily is something we've been talking for a long period of time now, and I think towards the start of this year, in fact, we were concerned, well, I was concerned about we were heading into an area where we could see the long-term trend, and I'm talking about that one over there. If I took this high here to this current high here, this tweezer top, we were heading into this area here where we needed to see January, February, March actually really pushing higher to see any further highs. Subsequently, that failed to materialize. As I mentioned, that 13.878 and change mark becoming a major resistance level, and an indecision followed by an up candle, but not a lot of momentum, followed by a very, very bearish engulfing candle indeed, which clearly stated we weren't going to see any further highs for the time being. And in doing so, we've seen a retracement. Now, each time we've seen a pullback over the years, you can quickly see we've had an extended pullback down to roughly around the area around about the 1200 mark. But we've seen a lot of areas where we've seen, especially around here, the 2228 mark, through 2010, in fact, through 2012, in fact, we saw a nice support level being forged on this particular pair. So if price was to continue to fall, as we've clearly not seen any new highs recently on the monthly, if it was to fall, then it would likely fall towards this level down here at the 12.28 and change. Roughly where price is trading right now to that level, you're looking in excess of 1100 pips, guys. So there's a lot of pips here to the downside. There's a lot of opportunities to the downside. And as long as we keep seeing a lot of bearish sentiment coming out of the Eurozone, primarily because we're not seeing a lot of growth, which Draghi was anticipating. We've actually seen over the past couple of months, in fact, Draghi and his sidekicks actually cutting interest rates even further, as they still haven't been able to get enough momentum in the Eurozone. So, and that's what led to this fall recently over the past couple of months. In fact, we've not seen any real growth in Eurozone, and subsequently what's happened is the ECB has had to cut the interest rates in order to try and get some liquidity in the market, but that doesn't bode well because obviously you're degrading your currency valuation. So what's happened is we've seen a clear bearish engulfing candle here, and subsequently this has formed a major top. Okay, we've seen here bearish engulfing tweezer top over here, same again. That failed to see any further highs growing, and now ideally long term we should be looking to the downside. So the long-term trend to the downside, intermediate, has been higher. So now, if I took the bodies, you can see this breakout over here has in fact really broken this intermediate uptrend, and now we should be looking to the downside. So now, a question mark, where do we look to as our first particular target? Well, we're seeing consolidation right now where we're seeing where price is trading right now on the monthly at the 13.29. But ideally, the next big one is going to be roughly down here at the 29.50 mark. Thereabouts, but ultimately back down to 22.28 would be ideally our long-term target. Okay, so what we could do is I could take a fib from these levels, from the current high, low, apologies, in 2011 to the current high, if we see in roughly around here in 2013, the start of late 2013, start of 2014, in fact, and you can see the 23.6 level has been breached. And we're heading towards that 38.2 here at the 13.24 and change mark. But you can see just by drawing these fib levels on, I have genuine targets, and they're in excess of 20, probably 200 pips or more. And the further we fall, the greater the distance becomes. So here we have a clear target where price should be trading between all these points to the downside. So as it stands at the moment now, we have valid points to the downside. So what I'm going to do now is I've just shown you there, just clearly looking at an opportunity in euro against US dollar on my monthly time frame. I can gauge straight away. I haven't even actually plotted the FX8 ultimate template on here. So what we can do, just to go back to basics again, is to apply the FX8 ultimate template. There you go. So now you can see the bias long term over here is predominantly looking negative because we haven't seen any new highs recently. So on the monthly we haven't seen any new highs, and that's going to start to wane on our long term sentiment. You can see quite clearly very bearish indeed. Our intraday sentiment has been one of positiveness, and that's primarily because we're consolidating, and that consolidation is now coming at a level where we had price support and resistance in the past. Clear hesitation, and this is going back to 2004, 2006. There's a hesitation in this area, and that's where price is actually stagnating right at this time. So now if I go ahead and I draw my fib levels on here, so take the low here to the current high recently, you can see that the 23.6 has been breached. Now we're heading towards that 38.2 level, and between where the 38.2 is right now, where price is trading right now to the 38.2, there's still 130 odd pips away. So it tells me that if I'm not seeing any highs here on my monthly, therefore I should be looking for negativity. And my intermediate trend has been breached. I can clearly see that. You want to go for the wick lows or the body lows, you can see that that sentiment has obviously been negative. So drop down to my weekly. Straight away I get a selling signal on my weekly, because if I look at the weekly over here, you can see all my indicators plus my R squared is complementing that negative sentiment. And you can see that we have a red arrow. There we go, red arrow, red candles, RMO below, OSMO below, and the institution moving average has been breached on the weekly. Roughly around, let me just draw that horizontal line in. You can see thereabouts 1341 and change. That institution moving average has been breached, and it's the first time we've actually seen price trading below that level since September of 2013. So negative indeed, because we're trading below the institution. We did see this candle the past 2 weeks, in fact, starting off very, very negative. However, by the end of close on Friday, price has pulled back to the bias to the upside, but it's not closed higher. It's still hugging the top end of the candle, but that top end candle is still below the institution moving average. So if we dominantly look at it as particularly a hangman, then we want to see price closing above the institution moving average. So going into the next week, I can then look at my news. So I can look at the news and say, okay, great, is there any major news announcements for euro or for the US dollar that likely could favor or give me more sentiment in either direction? And just looking at euro news, nothing really much here for euro until Thursday, where we have the French flash manufacturing PMI results. We also have the German flash manufacturing PMI results, and Germany is predominantly one that everyone's going to be looking towards because it's the major manufacturing production wheel cog in Eurozone. Other than that, there's not much else coming out, but there's a lot of US data. We have building permits, CPI month-to-month figures, core CPI month-to-month figures for Tuesday for the US dollar. Going into Wednesday, we have the FOMC meeting minutes. Very important minutes. So that's at 7 o'clock GMT on Wednesday evening. Thursday, we have the existing home sales figures as well as the Philly Fed Manufacturing Index, which is also an important one for the US market. So, and then we have closing off end of week Friday, we have Fed Chairman Yellen speaking, and we have the Jackson Hole meeting as well to conclude with that. So a lot of news, especially over the weekend, for the US market. And if that news predominantly favors the US dollar, just looking at some of those flash manufacturing index, they're expecting a slight contraction. Now that might very well play in Europe's Euro's favor. So we could see a bit of upside. However, if that's to be the case, then what we want to see straight away on our daily is this green line, which is my weekly fib level. The weekly institution moving average. We want to see price trading above that. On the daily, you can quite clearly see we are negative. Red arrows, red candles, RMO. The RSI, however, is above the zero level and green, and it's predominantly because we've been trading sideways. And as long as price is trading sideways, then obviously you're going to see the RSI showing a total opposite bias to the overall RMO, in fact. So still trading, but if price is to be positive near term, I need to be above 1341.66. And if I want to see a continuation for euro negativity, I need to see price trading below 1335 and change. If it doesn't break the higher or lower end of these two bands here, then price is going to be consolidated. I don't want to be trading consolidation because price is not really obviously decisive enough. And it means if it's consolidative, there must be a lot of indecision. And if there's a lot of indecision around, you're not really going to see price moving a lot, and it's not worth any real reason to actually look to trade it until we see a breach of either side. Ideally, the long-term sentiment is negative. Monthly, weekly, and daily is negative. So therefore, I'm looking for that bearish bias to concur and to be moving lower. So I'm looking for price to break below the 1335 and change to look for selling opportunities in the direction of long-term trend towards my 38.2 level. And I did mention there was probably 100 pips or so in that direction. On to sterling. Naked chart with candlesticks. The one thing you got to see over here on sterling, we went through a number of occasions where we saw long-term, we saw a very strong support through 2001. Through that very, very negative bearish recession, we saw 2007 lows, 2008 lows being tested at the same level here, roughly around the 1400, so psychologically a round number. And then we've seen price attempting highs, but failing along the years since then and pulling back. But recently, the most important one is you can see going way back here to 1995, 97, in fact 98, through 2009, 2010, a major level of resistance. However, recently with sterling's bullishness, bias, positiveness to the upside, growth, it is the strongest growing currency of the westernized currency groups, and we've seen growth and prices pulled or broken out recently. Before we didn't see any of that, and subsequently what's happened, however, that's come unstuck as we've seen some very indecisive news recently. And what price is doing now is trading the last 2 months. In fact, we've seen a nice pullback, but towards a price support and resistance level highs roughly around that 1669, 1700 mark. Psychological 1700 mark is predominantly the best thing to probably look at. So if you just went and wrote in the 1700, you can see that price pushed off the underside of that and now it's pulled back to this level roughly around here. If I apply the template to this, there we go, straight away on our monthly, we do get a buy signal, and you can see all our indicators telling us the buy to the upside is up. Blue arrow, blue candles, RMO above, the OSMO is above. However, the OSMO is dark green. So we want the OSMO to actually be bright to tell us that it's genuine buying. However, at the moment now, there hasn't been any genuine buying recently because price has been consolidated. The institution moving average on our monthly is still below price. So if I wanted to just take the institution moving average as a level of price support and resistance, you can see that price has been above that level for what has been now 6 months. And as long as price maintains above that institution moving average, the bias long term is up. And you can see the indicator here on my monthly is telling me that the bias to the upside is, the bias has been to the upside. So now if I'm looking for any opportunities, I will be looking to obviously be trading with long-term sentiment, in this case to the upside. However, the last 2 months hasn't been reflecting on that upside, and you can see that the indicator box over here is predominantly red, and that's primarily because price has actually failed to make any new highs, and if price is not making new highs, she's then going to be making new lows. And if I drop down to my weekly, you can quite clearly see that price has actually fallen quite aggressively over the last month, in fact. And it is now heading back towards that major support and resistance level, monthly fib level, institution moving average, which is this dark green, the bright green line that I actually put in. So now I can see that on my weekly is predominantly red. The R squared is not even complementing any of that sentiment, and we want the R squared to complement because it's telling us it's genuine sentiment. There's a lot of negativity here, but it's not generally happy with that genuine sentiment. And I know it's going to be, as long as it's trading above that 1662 mark, it is still predominantly to the upside. Okay, and I looked at my candlestick color to confirm that, because the moment the candlestick color changes, it tells me now that the the overall sentiment has moved. In this case, you can see since the lows here in 2013, in fact, the candlesticks have been blue. We have a red arrow, but the candlesticks are still very much blue. So I know it's consolidation in an upward trend. And I'm looking towards that green horizontal line as my savior. It's my safety net for trapeze artists. And as long as price maintains above that level, then my bias should still be reflecting to the upside. Okay. If I draw an intermediate trend on here, you can quite clearly see that that level has been breached. So no swing highs, swing high, swing high, swing high, swing high, swing high, swing high, swing high. And now she's broken that swing high and now she's falling lower. And you can see the last 2 weeks, in fact, price is trading below the prior swing, which happened to be roughly around at the 1675. So the only thing that I'm looking to see price actually utilizing as a potential support level is this level here at 1662. If price were to drop below that, then we'd like to see what we'd likely to see is that bias shift from near positive now to negative. And if that's the case, then I can see some levels to the downside where there'd be likely targets to profit from. Ideally one here at 1646, then a major one over here at 1620, which would be a major one, a long-term resistance level through 2012. In fact, further resistance through July 2013 and support going through November and December going into 2014. Back below that one, you're looking to go roughly around your 1585. There are a number of targets to the downside. The overall long-term one's going to be down here at the 1477 mark. Okay, so I'm looking at this and going, well, what are the opportunities going forward? Well, price is trading quite close to that institution moving average monthly level. So if I'm looking for any bias to the downside, I'm going to be quite wary of this green line. The closer price gets to that, the more indecision will come into it, because psychologically long-term traders will be well aware that price is heading into that major support and resistance level, which has been a factor over so many years up until recently. If we look at the sentiment, red, 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 you can see we're trading below the institution moving average here on our daily. And if I just pan out, you'll see that we haven't traded below the institution moving average on our daily since we're going back to July of 2013, in fact. So it's been a while since we were trading below the institution, and price has been near term trading below that. So I've got to be well aware of that. So my bias is now looking short. However, I've got to be vigilant because that green line constitutes my institution moving average on my monthly. I've got to be well aware if I'm looking for any selling opportunities here. I've got to be quite vigilant because it's quite close. 62 pips, I'm not going to get all of that. So it's quite close in terms of a long-term support and resistance level. Ideally, like to see it trading below the 1662. So if I'm looking for the bias of here, I'm going to be quite indecisive. And you can see that end of week, we saw bearish engulfing candle closed lower. But going into Friday, we saw a lot of indecision. Got to get below 1662 to see a continuation of this negativity. Otherwise, we could see price actually consolidating around this area and then a reattempt to the upside, because the long-term sentiment still is looking to the up. Looking at the US dollar Swiss franc on the empty chart, you can see here from their highs in 2000, in fact, we've seen nothing but negativity for the US dollar against a strong Swiss franc. However, that came unstuck over here when we had this morning star hammer formation here in 2010, late 2010. However, prices have recently been able to get above a major support and resistance level, and the most noticeable one is this one around here at the 98, 91 and change mark, roughly around the 1000 mark, as we saw price support level becoming a new resistance. And price hasn't been able to get above that level recently, well, since 2011, in fact. So if I superimpose the FX Ultimate template onto that, you can see that the long-term sentiment over here is one of negativity, and the R-squared is complementing that. You can see that the candlestick color is predominantly red. Yes, we have one or two blue arrows, but the overall sentiment has still been to the downside as the RMO is complementing that negativity. And what we've seen recently, as I mentioned, if I draw that horizontal line back and again, you'll see the long-term major support and resistance level, price is still very much below that and been making new lows. So my bias on this particular pair is still one to the downside. However, saying that, we haven't seen any new lows recently. Roughly around the 87.31 and change mark, you can see that we had a consolidated range here for a number of months. In fact, the start of this year, we saw February, March, April, May, June, finding support over here and price moving to the upside. However, the candlesticks are still very much red. We do have a blue arrow. The RMO is still below. So here, if you're looking to bias to the upside, be wary because the predominant trend is to the downside. However, saying that, if you're not seeing any new lows, there's more likely to be consolidation, and then the bias will start to move from negativity to positiveness. But we want to see new swing highs. We haven't seen any new swing highs because price is now trading at a potential swing low area. So the 91.075 becomes a major level of importance for us, because you can see going back recently, price is actually consolidating around this area. So if we want to see, if price is to be positive here, growth-wise, then we need to see the following month, this month now, August, closing higher. First to do so, we'll see price consolidating yet again, which has been the major focus over the past 6 months or so. So very, very important for going down to a weekly to see price getting above that level. You can see the institution moving average is still on our weekly above price. We do have a blue arrow. However, the candlesticks are positive. RMO is above and the OSMO is above, but dark green. But our institution is still above price, which is a negative. No. Got to see price trading above the institution to obviously be biased long term. That's not the case. So what I'm looking for this week, in fact, if the US dollar is to be genuinely positive against the Swiss franc, is I want to see the next week or this month, in fact, closing higher than at least this institution moving average, which is roughly around the 91.70 mark. Failure to do so would see price still maintaining that bias negativity, and then I should be looking for shorting opportunities in the direction of the long-term trend, which in this case will take me back to roughly around the 89.32 and change mark, the price ring high, ultimately back towards this major support and resistance level, which has been in play for most of this year, roughly around the 87.31 and change mark. So got to see a break higher. Failure to see that this week would obviously would put more bearish sentiment pressure on price, and therefore look back towards long-term trend, which is to the downside. On to the last pair of the day, the US dollar Japanese yen. You can see that we've seen nothing but a lot of negativity over the years for this particular pair, in fact, and price is heading or consolidating in an area where we've seen the long-term trend swing low, swing low, swing low, and you can see price is consolidated in and around this area. And this area around here is also in conjunction with a fib level. So if I just apply the FX Ultimate template onto this particular chart and just zoom in so you can see the long-term trend on this. If I take that current high right down here to this level over here, you'll notice that the 61.8 level is in play and has been a major resistance level over the past. We had a tweezer top over here. Prices fell to rally higher in that level, which also constitutes to the institution moving average, and she's been suppressed. We do have a blue arrow, blue candles, the RMO is above. However, the OSMO is clearly not in favor. So we have 3 buys and 1 negative, which is a sell. And you can see the indicator box over here, very much all over the place. Half blue, half red. Not really giving us anything. And it becomes more predominant when I go to my weekly, because you can see how long price has been so indecisive on our weekly. Look at that, guys. Since the start of this year, price has failed to really get out of this rectangular consolidation over here. It's been horrible, absolutely an absolute nightmare. I've actually not even traded this since the start of this year because it's not done anything. It's not made a new high, it's not made a new low. In fact, the low has become a very, very strong support, and you'll notice the candlesticks still haven't changed color. So my bias is still looking to the upside. I'm still looking for that buying opportunity, but if I don't see any bias to the upside and price falls back within that consolidation, I am still very much hesitant to look for any selling opportunities because we haven't clearly broken that current support level, and it's been a very strong support level because it hasn't been breached for so long. So clearly not interested in this particular pair, and I've stood aside. I'm not going to go into further detail because it's done nothing, and it's not even worth attempting, because why would you want to actually trade this and you would have not seen any price action or movement over the past 6-7 months, and it's just not even worth talking about. So that's it. 4 majors done and dusted for today, for this week in fact. Look to see if there's any fundamental news that could actually move price. It's always important to be well aware of what's coming out for the following week. Okay, it's all very well doing your analysis on the charts. Be vigilant. Take some time out to look and see what's coming out in terms of the fundamental side. There's a lot of data out there that drives the market fundamentally. Just be well aware of it, And if you are trading any particular pairs and there's a lot of news coming out for that particular pair, be wary of any volatility going into the news announcement and volatility coming out of the news announcement. If you're looking to trade anything, be vigilant there again. You don't want to actually be trading volume or volatility, and indecisive volatility, because you're likely to you can lose a lot in terms of your account, and you end up risking a hell of a lot for very, very shallow returns, which is not clearly what you'll be doing as a trader. So be aware of those facts, guys. Get them right, and I can guarantee you'll become a very, very strong or a very, very profitable trader going forward. I'm going to leave you with that. Hope you have a fantastic week this week. It's the last week going into second to last week going into September. So we do have some analysis, a lot of news out for the US market in particular. Just be well aware of it and take it on board. I'll leave you with that. I hope you have a fantastic trading week, and I'll catch you next week. Until then, you guys trade serenely.